Okay, and welcome back, students who are taking financial accounting. We're working on the Chapter 2 problems, the Group B problems that were assigned in the digital study guide. So this series of videos will be covering those Chapter 2 problems. And as always, if you don't understand something, um, you know, pause, rewind the video, and if you still don't get it, then feel free to telephone and speak with an instructor. But realize that going back might also entail going back through the theory videos and rereading the textbook. Uh, because if I'm not going to keep on explaining theory for each and every single problem. Like, for example, I see that problems 37, 38, 39 are you have to make journal entries, and making journal entries, you have to have the practice of making them. Well, I'm not going to go through all of the theory for each and every single journal entry. I mean, we're talking, 30 journal entries. I'm repeating myself 30 times. So you'll go back through the theory videos, if you're not getting something um, on your in the business group, on the student community where you're watching this. There is a video in the introduction section on how to make journal entries when you don't know how. So um, and even in the theory of the chapter 1 and chapter 2, I explained that how to make journal entries. So I'm not going to be going through that again and again and again. I'm just going to work through uh, the journal entries. And like I said, if you're not getting it, then you'll go back and watch those theory videos. So with that said, let's work on problem 2-37. Okay, let me get my pen. Here it is. Okay, it says here, Tina Dalton practices law under the business title Tina Dalton, Attorney at Law, Inc. During September, her law practice engaged in the following transactions. So these are the transactions. She uses the following accounts. So these are the general ledger accounts. Um, Cash, receivables, supplies, land, office equipment, payables, notes payable, common stock, dividends. Now notice that there is no retained earnings account here. Um, on your chart of accounts, if you're incorporated, you should have a retained earnings account. But this isn't a chart of accounts, and we're not creating a trial balance because our requirement here says just journalize each transaction. So I don't need those accounts, but just be aware that if you have a listing of these accounts here, you should have a retained earnings if the business is incorporated. So it's just saying journalize each transaction. Now, when you're in Chapter 3 and you actually have to close out the accounting period, you're going to need that retained earnings account. But for this problem, we don't need that. So September 1st, it says, sold $60,000 of common stock to Dalton to start the business. Okay, so if I'm making a journal entry, I have to put the date, and of course, I'm going to need a debit and a credit. And remember that formatting is important, so I'm going to have put my numbers in 2 columns. If I was using a 2-column journal, I might label the columns debit and credits. Okay. Also, too, when I go to make my credit entries, I'm going to indent my credit. The reason why is because here's where my debits are going to be, and notice that it's an indentation here for the credit, so I'm shifting my credits to the right a little bit. And you always put your debits before your credits. I see students who will show the credits first, and although technically it's not correct, it is troublesome for those who have gotten accustomed to debits being first and then credits being second. So always put your debits before your credits. So we're selling $60,000 of common stock. So when I make a journal entry, the first question I ask myself is, am I affecting cash? And in this case here, it's yes, because I'm getting $60,000 in cash. So I started out with some amount, and if I'm increasing my cash to $60,000, and cash is an asset, and I increase my assets on the debit side, because that's the normal balance, then I'm debiting cash for $60,000, and I'm crediting something else. Well, what am I crediting? Well, we're purchasing common stock. In other words, it's an investment in the business. So I'm looking at my equity accounts and I look to see that I have a common stock account here. Okay, so I'm going to credit common stock for 60,000, and that's my journal entry. Simple as that. Okay, so I'm going to that was that. Now we're going to do number 3. I mean, not number 3, 9.3. Okay, it says paid $450 for the purchase of office supplies. Okay, so I'm asking myself, am I affecting cash? Yes or no? And the answer to this is yes, because I have a certain amount of money for cash and I'm paying it out. So that means I'm decreasing my cash by $450. Okay. Well, if cash is an asset and I increase my assets on the debit side, remember that relationship. Well, if I'm increasing my assets on the debit side, that means I decrease my assets on the credit side. And since cash is an asset and I'm decreasing it, that means I'm going to decrease my cash by $450. So if debits must equal credits, then that means I have to debit something else. Well, what am I purchasing? I'm purchasing office supplies. Is that something we own? Yes. Is it something we owe? No. Is it an investment in the business? No. Is it a revenue? Is it a sale in the operation of the business? No. Is it money going out for the operation of the business? In this case, I'm going to say no. All right. Remember, with things like supplies or office supplies, if you're using it as for the operation of the business, then it would be it would generally say supplies expense or office supplies expense. Okay, if it doesn't have the word expense, then that means most likely you're going to own it. So in this case here, I would look at my asset accounts, and as you can see, I have a supplies account and an office equipment account. Well, obviously it's not office equipment, but I do have supplies. So I'm going to stick the office supplies in the supplies account for 450, and that's my journal entry. You need to look at the category of account first to determine what category it is. Is it an asset, liability, equity, revenue, or an expense? And when you determine that category, like in this case here, I determined that it was going to be an asset, okay? Then I look at my accounts to see what account best fits. I mean, I don't have an office supplies account here, but I do have a supplies account. So I'm going to put the office supplies in that supplies account. Is it possible to have just an office supplies account and a supplies account? Yes, in that case I would stick it in office supplies, but because I don't have office supplies and I only have a supplies account, that's where I'm going to put it. Okay, next entry. Right, paid 43,000 cash to purchase land for an office site. Okay, so I'm going to date it 9/8, and the first question I ask myself is, am I affecting cash? In this case, yes. I'm paying out cash, so I'm decreasing my cash by 43,000. And just like the previous entry, cash is an asset, and I increase my assets on the debit side. So if I increase on the debit side, that means I credit on the credit. I decrease on the credit side. Well, if I'm decreasing my cash by 43, that means I'm crediting my cash by 43,000. And since debits must equal credits, okay, I have to debit something else. Well, what am I going to debit? What are we doing here? You have to look at the context of whatever it is that your transaction is. Don't just automatically go look at the other accounts that you have. I mean, granted, it's easy to see purchase land, okay, and you see a land account, you're going to stick it in a land account. And to be honest with you, an awful lot of times, especially after you have a lot of experience, it's going to be that simple. or if you're in the workplace, you're going to have the accounts all memorized. But realize that occasionally you're going to get yourself in trouble if you don't understand the process. So what am I purchasing? Well, I'm purchasing land. Is that something I'm going to own? Yes. Is it something I'm going to owe? No. Is it going to be an investment in the business? No. Is it for the operations of the business? Is it a sale or an expense? No. So yeah, I'm going to look under my asset accounts and I'm going to see that land account. So I'm going to debit land for the $43,000. Okay. And that's all there is to that. Okay. And remember, once we have determined, oops, I want to erase that. Once we've determined, our credits, then we simply back into whatever our debit is going to be. I don't have to think about whether I'm crediting or debiting my the last half of the entry because I'm just backing into it. Okay, let's see here, number 12, purchased office equipment on account for $43,000. Okay, so am I affecting cash? Well, if I'm purchasing it on account and on account is on credit, that means I'm not using cash. So the answer to my first question is no, I'm not using cash. So I ask myself the second question, am I affecting accounts receivable or accounts payable? And the answer to that is yes, I'm affecting accounts payable because remember, receivable is when people owe us, payables are when we owe somebody else. So I'm purchasing, right? That tells us we're going to owe somebody else on account, on credit, as an accounts payable, $43,000. Right? So if this was the amount in my accounts payable account before this transaction, and now I owe $43,000 more, $4,300 more, that means I've increased my accounts payable. Well, accounts payable is a liability account, and we increase our liability accounts on the credit side. So since I'm increasing my liability, that means I'm going to credit my accounts payable for $4,300. And since debits must equal credits, I have to debit something else. Well, what am I going to debit? What am I buying? Office equipment. Office equipment is an asset. I'm going to own it. And if I look at my accounts, I see an office equipment account. So I'm going to debit office equipment for $4,300. And that's that journal entry. Okay. Okay, so that's 12. All right, 917. Borrowed $65,000 from the bank. Dalton signed a note payable to the bank in the name of the business. So if I'm borrowing $65,000, right? I ask myself, am I affecting cash? And that's yes, right? I'm getting $65,000 from the bank. So I'm increasing my cash. Oops, I erased this last entry. So I'm increasing my cash by $65,000, right? So I'm going to debit my cash for $65,000. And notice what I did. I just did not, go through the, is this an asset, debiting, crediting. I mean, by doing so many of these, you're going to start becoming accustomed to whether you're going to debit your cash or credit your cash. I mean, it's just a matter of building your knowledge and associating it and just keep on doing it again and again until you internalize it. But realize that you have to develop the process, the mindset, the thinking, and understanding the concepts behind it, because you're going to run across entries that you're not going to know how to do, and you have to go back to those concepts and understand how to arrive at the right journal entry. It could be, to a certain extent, you can become complacent and just automatically mimic what's going on. Okay, and if you do that, you're going to find yourself missing or not making correct entries. So I'm since I'm debiting cash for 65,000, debits must equal credits, so I have to credit something else. Well, what am I crediting? I'm borrowing 65,000 and I'm signing a note payable, right? So that means I'm going to owe something, and that means I'm going to look at my liability accounts, and I have payables and a note payable, so I'm going to use my note payable account here and make the entry for 65,000. So that's the journal entry for the 17th. Okay, next entry is I'm going to pay $2,800 on account. So that's the 26th. Am I affecting cash? Yes. Why? I'm paying out $2,800, which means I have $2,800 less. So if I have $2,800 less, cash is an asset. I know I increase my assets on the debit side, which means that the opposite of it is if I'm decreasing my cash, that means I'm going to credit my cash. So I credit my cash for $2,800, and now debits must equal credits, so I have to decide what I'm going to debit, right? I don't have to think about this. I know I'm going to debit it, right? I'm backing into the debit. And the reason why I mention that here is because it's on account. Well, what does on account mean? On account means credit, right? And we know that if it's on credit, we owe somebody something, so I look at my liability accounts. Okay, and if I look at my liability accounts, I have a payable and a note payable account. Well, if I was paying on the note payable, my transaction would say I'm paying on the note payable, but because I'm only, it only says on account, that means I know it's my accounts payable, so I'm going to debit my accounts payable for $2,800, and that's my journal entry. Now, I went over this, I paused and made a point of saying, oh, if my debits have to equal my credits, then I have to debit something else, and I'm going to back into it because this is an example of it. Remember, if I have a liability account, right, and this is proving why I'm going to debit my accounts payable, okay, whenever I'm purchasing, like we did for this here transaction for the 4,300, when I'm purchasing on account, right, I'm buying something, I'm going to owe somebody. The normal balance of a liability account is a credit. So a lot of times your accounts payable, you're going to credit your accounts payable because you're increasing your accounts payable. You're increasing your liability. And what will happen is if you're not thinking about it, well, what happens when you decrease it, right? When you decrease it, you're going to debit your accounts payable because it's a decrease in your liability. And what did we just do? We paid off some of our liability, which proves that we, debited, the accounts payable. But notice I didn't have to go through all of that thinking in order to make that journal entry. Okay, just by sitting here saying, I know I have a credit to cash, that means I debit something else. All I need to do is just find that account, the accounts payable, and I don't have to think about whether that's right or wrong. Okay. Okay, that's that. Okay, the 26th. All right, now we're on the 30th. Revenues earned during the month included $12,000 in cash and $16,500 on account. Okay, this is a little bit more complicated. And the reality of this is we can do this in two journal entries. Or we can combine them into one, right? So I ask myself, and as you become more experienced, it's easier to combine things. So I'm going to actually, you know what? I'm actually going to pause here because I'm at 20 minutes. And as I glance down at my next, these here three entries, these last three entries, they're going to be a little bit more difficult. So I don't want to make the video way too long. So I'm going to pause here and pick up with this in the next video. Okay.